So in this video, we want to talk about Under Armour, and they reported a strong Q3 earnings results with revenue reaching 1.49 billion, which surpassed expectations. Company also announced gross margins improved by 200 basis points, and they also raised their full-year adjusted operating income forecast to 165 to about 185 million dollars. Now, the company's strategic shift towards premium offerings led to an increased average order value and improved margins in its direct-to-consumer segments. Now, despite declines in some regions, Under Armour's cost-saving strategies focused on full-year sales are showing positive results. Now, it's a far cry from when they went public back in 2005. Yes, price rose only to go lower, only to shoot higher, a lot higher, a lot higher, a lot higher, reaching an all-time high of roughly $53. But this was a story of growing too quick, too fast, and in the process, their product was everywhere. It no longer became a premium, but became a commodity. And with that said, we find prices now at sub $10. Now, I do want to point out this monthly sell level, but we're not going to get up there anytime soon. So we want to look at current price action. Now, you did have some support. That was because of this monthly buy level that was established back in November of 2010. You had this rally basing candle and then the rally out. So this kind of tells you these wicks at the bottom of these candles, the real buyers are roughly at $6. How high can price go in the short term? Well, we are getting a pullback, but this pivot high at $13 will become my target. Now, above the pivot high, you do have a wick over wick at $15, so we'll look at that on the weekly chart. You know, that's a level of interest. It's kind of ugly, but nevertheless, you have this drop in price, 3 basic candles, and the drop, which took out this pivot low. And so if I was to draw that zone, I would draw it on that upper level. So this is a level on level. And I like level on levels. All right, but we're going to look at current price action. We did get a rally and then a dump. Now, it would have been nice if price closed above this level at $10. Why? It's a round home psychological number. Although price did breach the most recent weekly sellers level. Drop in price, basic candle, and then the drop out. Price attempted to come back, couldn't, and then fell down to the lows of $7. So let's take this off the chart. And let's drill down to the daily chart. This was the pump and dump that we saw. We have this gap close on the daily chart. We have a gap higher. So we have daily buyers at $6.50. I want to look at current price. I want to go up and to the left. You have a level of interest. Let's just bracket that level just to see what price did. But other than that, no real levels. You have a little level of interest. This drop in price, basic candle, and the drop out. at about $12. All right, so I want to look at this to see what happened. Price just shot through it. And then nearly came to that weekly level at $12. If I was to denote the level, so this level is real. If you can get a return higher, your next target is going to be that $12 level. So let me know what you think. Are we going to see a gap close like we saw in October? Or are we going to see a false gap close like we saw back in September of 2024? Let me know what your thoughts. Is the Under Armour recovery real, or is it just a false breakout to the upside? Thanks for watching. Subscribe. Please like the video.